Welcome to the Market Enthusiast podcast, where Good Life's Noah Brooks, Chief Market Strategist, and Chris Needs, Senior Research Analyst, break down today's topics, covering their impact on the economy and personal finance in a fun, easy-to-understand way for investors of all levels.
Hey, welcome back to Market Enthusiast. I'm Noah Brooks, and obviously Chris Needs is with me today. Big week, economically speaking, Chris.
Yeah, we have a lot of economic data out this week. It's a busy schedule for sure. Lots of headlines coming out. So the big one today, we got a negative GDP print. We also had PCE come out same day, and we had JOLTS yesterday, Tuesday. So yeah, it's been a busy week for sure. And we also have earnings season in flow here. Peak earnings season. The most market cap of any week during this earnings season is also happening right now.
That's a lot to take in, isn't it?
Yeah.
But even more so, Friday is the jobs number.
Another big report.
So last month, we had about 226,000 jobs created. Unemployment ticked up to 4.2. And this is really going to be the first month where we've seen the impact of, let's say, government layoffs and the possibility of layoffs from tariffs. We haven't really seen too much of that yet, but this would be the first month since the announcement. So we'll see if there's any impact there. There may not be. I don't know. Honestly, I do not know how many layoffs. I know there's a lot of early retirements, but I don't know how many, let's say, forced layoffs there have been from Doge. So I'm not sure that those numbers are going to come through this month or that next month for that matter. But it is a big week. You started by saying that GDP was down. First time since I think March of 2022, fell slightly, contracted a little bit. And what was the main reason for that? They were talking about it all day today.
Well, they were talking as part of the reason was everybody was buying, loading up before these tariffs came on. We saw an interesting number that we couldn't figure out how exactly it was calculated. But yeah, lots of overseas buying in terms of supplies and inputs. And, that sort of maybe took away from what we were actually producing in the moment here and selling in the moment.
Yeah. I saw an ad this week for a car dealer that said, I needed to come in right away to get my pre-tariff pricing. I don't know if it was Ford or where they were. I think it was.
Is that the sales gimmick they're running?
That was what they were saying, and I was like, I don't really know. That doesn't.
Just like the Memorial Day sale, come get your pre-tariff sale.
It was the first time I had seen that in any type of advertisement, and I don't know if that's accurate or not. I didn't rush out for a car. Let's put it that way.
You're in the market though, aren't you?
I am. Yeah. I'd like to get a new car soon, and I hope the prices don't go up. That ad didn't entice me to go get one, but it's one of those things. So obviously we had some really bad days after the tariffs have been announced. But since then, we've kind of been coming back, not necessarily every single day. I think at the low point for the close on the Monday after the tariff announcement, market was down almost 18%, I think 17.6. Mm-hmm. And today, year to date, we're down like 6% on the S&P 500.
Yeah, it's been a very aggressive comeback. We were saying sort of in the moment, this, if you look at the statistics historically, could be a really good buying opportunity. And so far it's looked that way.
Yeah.
The VIX spike again was a buy signal, and it's been a really strong, especially second half of April. And, we're happy to see it. There's been some life from growth again, which we did not see prior in the year for the most part. And, right now, the people who bought the dip are sitting pretty and feeling pretty good.
Absolutely. I'm not going to start quoting Buffett or anything like that, but when you see the market go down 15, 18%, and that was pretty historic in terms of the time frame involved. But those are the times that you have to, flip your head around, move your perspective a little bit, and really think about it as a buying opportunity.
I mean, we were at the point where we don't invest in or really discuss crypto that much, but we had the market, notices things like that. For the first 4 months, and actually going back into December as well, Bitcoin was less volatile than the S&P 500.
Yeah.
That is really strange.
I mean, it doesn't happen that often.
Yeah.
So it went from a high beta to a low beta in a month.
Technically, yeah, over 4 or 5 month period. But yeah, I mean, a part of that is, and we were just talking about this earlier today, it seems like the reaction function, we were saying previously that we're going to get tired, or there's going to be less of a drawdown or impact of the tariff headlines or Trump press conferences, things like that. And we've really seen that over the past 3-4 weeks where, he'll say something bombastic and the market won't fall 2% like it was in March.
Well, it's, I mean, think about the market as a forward-looking device, right? And when the tariffs are announced, they were significantly higher than the expectations.
Mm-hmm.
And so that's what really moves the market, is something that's not already priced in. So I think there was a notion out there that there were going to be tariffs and they weren't going to be that bad, or they were going to be that high. And so when the market changes, or when there's new information added to the market moves immediately.
Yeah.
Right. So now we've had some time to digest it. The market's had time to think about it. And obviously kind of backtracking a little bit, bringing those tariffs down. There's still tariffs, significant tariffs, 145% on China. And we're talking about deals, whether that's the EU, whether it's Japan. The thing that strikes me at the moment that kind of maybe gets my feathers ruffled a little bit is that there haven't been any yet.
Mm-hmm.
Right now, I know it's relatively early and this is all unfolding day by day, but it seems like, and maybe this is just they're going to announce all these deals all at once. Possibly we have a G7 meeting coming up here in a week or two, but we haven't seen
a lot of side conversations.
A lot of side
conversations.
Oh, there's no question about it. But we haven't seen anything come through yet. And you and I had said, we talked about headline risk, and we thought that the headline risk was to the upside. And I still tend to think that, but I feel like the longer we go without some type of deal announced, whether it's EU, whether it's Japan, whether it's one-off countries like a Vietnam or something like that, I feel like maybe the longer it goes, the tide will turn again to the downside.
Could
if we don't
retest
get it
potentially. Yeah, I see that as rational per se. Trade deals are nothing quick. Think about how long USMCA took to get negotiated out.
The new NAFTA.
Yeah, the new NAFTA. And now we're going to do it with however many number of countries, 50 plus. I think they said they've already actively talked to, or 70 plus they've already actively talked to.
Yeah.
I just want to go back 1 second and maybe get your reaction or thoughts on, think about how bad it was when he announced on 170, 180 countries at once. Like, market was shocked. The weighted average, everybody was throwing out their estimates. This is anywhere from 18 to 23%, tariff or tax across, the weighted GDPs of all the countries we trade with. And then when he pulled them off and the market went up 8-9% on that Wednesday, if it was strategic in hindsight, it seems really smart. If it was strategic and planned, that he went from scaring the whole world that way to saying, oh, it's just going to be China getting the screws put to him, not us.
Yeah.
And the market took a huge breath and markets came back very quickly. I look at that as, if that was our way of getting the whole world on board with us getting China into a fair trade deal and tariffing them aggressively, I think that's a masterclass. But again, that would require we maintain good relationships down the line, and we do get these trade deals, because if we get these trade deals and China stands alone, we will hold a lot of leverage with them. And we've seen China come out and say, don't do a deal with the US that in any way harms us, or you will pay for it. So they're definitely trying to fight back from us getting those deals, and maybe they have hampered and slowed down some of these deals. Think of like possible. Vietnam.
Yeah. Well, I would imagine that they may have slowed down some of the deals where they have significant leverage,
Mm-hmm.
right? Countries close to them, Vietnam. Uh, I don't know about South Korea. I mean, I know they do trade, but and then there's Australia, right? There's a lot of trade between Australia and China. I don't know how much leverage they'd have over Australia with that, but certainly some of the smaller countries and maybe possibly some African countries,
Mm-hmm.
right? They're starting to do a lot of trade with Africa.
They have a lot on Africa. They have all those debt deals. I think we've talked about at some point before where almost if any nation steps out of line, essentially China says, well, we basically own everything in your country now. Besides your government, you can still have your government, but we own the rights to everything.
We own the roads, we own the water, we own the
right.
plants,
all the rare earth metal
Yeah.
production, but no, all I was saying with that was if we started with we're going to tariff China 145%, we'd see the market react just as negatively. But because of the order things went and how it went, everyone sort of came on board to saying, oh, it's just China. Companies will figure out avoiding China. They've known that's been coming down, the railroad for a while now. So I thought it was interesting to see how things went out. And I don't know if it was truly planned or strategic or not, but it made me view our reactions and our trading policies with them a little bit differently, and something to think about.
Yeah, well, so year to date, S&P down about 6%, mid caps down significantly more, about 9.5%, and small caps are really taking it on the chin, down about 13%. But do you know what is working this year for investors?
Value international,
a
more
diversified
than value.
portfolio,
Yeah.
right? The traditional 60-40 with some emerging markets and developed markets international and a little bit of this. It's working again.
Some countries we're not accustomed to seeing leading the country ETFs. Poland, Spain,
Spain's
Greece,
up 30%, Poland's up 40%.
Chile, Mexico, Italy, Germany.
It's not our forte here to invest directly in some of those individual countries, but we certainly have investments in developed Europe, which is up almost 13% for the year, or even the EFA, Europe, Asian, Far East, up 13% for the year. So when I look at the benchmark, what we use for like 60-40 investors, right? So 60% stocks, 40% bonds, and a diversified portfolio of each, the benchmark is down 2% as of yesterday. And I think to myself, well, listen, that's not really that. Not only is it not that bad, it's actually great after what we saw in April and March.
For the volatility, you would take that return for sure.
And so, you mentioned being opportunistic. I mean, that was really the time to do some buying.
Mm-hmm.
It really, really was. So for people that do rebalancing on a regular basis, the end of the quarter, I think they got some good deals.
Yeah.
And hopefully it'll stick. Now, you said you made reference to testing the lows, right? So we're not even, we're not close to the lows at the moment, but it's certainly possible we could go down. And I think, you got to start looking at some of those quality American companies, or, as a broad market investor, whether you're just investing in the S&P 500 or something like that. If we get back down to those lows, I mean, you've got to be chomping at the bit to buy some of that stuff.
Yeah. I mean, we had two big companies report. Obviously, they're Mag 7, so we'll always keep an eye on them. Coming in from two different perspectives, you had Tesla, who everyone expected it to be probably the worst, year-over-year quarter they've ever had, or going back to, a recession time type number. And, massive miss on the revenue and earnings. But you know what? The stock was positive. I think it was about 6 or 7% the next day because of how bad expectations were. So it's all relative, and it's all for discounting relative to the expectations of how bad it's going to be. And then you have Google, who announced a $70 billion buyback and an increase of their dividend. And they're talking about the Waymo, opportunities that they have. So, you have companies going both directions right now. And
I can just, you talk about the Waymo, and I know you have a Tesla and it has full self-driving. I don't think you use it. I'm still at the point, and maybe, I'm a little bit older than you, but I'm still at the point where I'm not ready for a full self-driving car. I just don't think I could get in and be like, "Hey, car, take me here," and not want to be grabbing the steering
I
wheel.
think we both like to drive, though. So,
Yeah,
I mean, yeah.
no question about it. But like, are you at the point where you could just sit down and start looking at your laptop and, read a book while the car was taking you somewhere?
They wouldn't let me, unfortunately, because it's supervised. We have to keep your hands on the wheel. If you take your hand off the wheel for like 10 seconds, yeah, it'll be bad.
But I mean, what we're talking about with Waymo is a situation where you're going to get into a self-driving vehicle
with no steering wheel. Yeah.
And the car, like an Uber or a cab, is going to take you somewhere, and there's no person in there.
Mm-hmm.
And I'm not sure I'm ready to do that.
I remember seeing a story. This was probably about 6 months ago, where someone, I think it was in Arizona, got into a Waymo, and it got stuck in a loop in like a traffic circle, and it just kept going in a circle like 40 times.
Look, kids,
and they
Big
couldn't
Ben.
get out.
Look, kids, Big Ben. Yeah, I don't know. That seems like something out of a movie. It just kind of creeps me out a little bit. I see videos. Sometimes I get into that feed and I see videos of people where you see someone, supposedly someone taking a video of a car next to them where the person's nodding off or sleeping or reading the newspaper or something like that.
Didn't you say you get into like a Russian car crash algorithm every once in a while?
That's where my feed goes. Yeah, there's no question about it. These big trucks rolling over and all sorts of crazy stuff happen. But yeah, I mean, kind of nutty. I'm not sure I'm ready for it.
We were talking about international there, and I just want to talk about two of those, top returning country ETFs. You had Poland and Austria, who are right in the neighborhood of Ukraine and Russia's conflict. And I think my read through to that is people are waiting for that peace deal, and which country's manufacturing is just fine and are going to be essentially outsourced and utilized to bring Ukraine back afterwards. And I think it's, Poland and Austria are going to get the benefit of the doubt, and their stock markets are getting the benefit of the doubt right now. And I'm sure the earnings will come since the market is for discounting. But, we still haven't seen a deal yet in Ukraine or Russia. We're talking mineral deals still here between us and Ukraine.
It wasn't, if I'm not mistaken, they were close to signing one today. And the ask from the White House was that they paid back the money that we've spent, and then they kind of took that off the table in exchange for just a mineral deal, where we had exclusive rights to their whether it's minerals, rare earth minerals, or whether it's metals, aluminum, things like that. I mean, is that positive? Is that positive for the whole scenario?
I heard Ukraine again sort of stepped back from that deal, and that was as of early afternoon today. I mean, that deal would be positive because, we would defend our businesses that are mining and helping out, hope to, yield those metals and what have you. So it would be a positive to get that deal, certainly. But, if it doesn't pan out, look where we're at. Would you compare this to like 50th anniversary of what was it, the fall of Saigon?
Sure.
Would you compare this to like a Vietnam type scenario?
I mean, yeah. So today marks 50th anniversary of the fall of Saigon. I'm 49, so I certainly don't remember it. But growing up as a kid, obviously Vietnam was right there. Right behind me, if you will, and certainly learned about it. I mean, we spent a lot of time, money, blood, in supporting South Vietnam. And then after years and years of fighting, we walked away after the fall of Saigon. And it was kind of all for naught. Now, in the end, Vietnam today is, virtually a capitalistic country. They export a lot. We certainly buy a lot from them. But it took 50 years and really didn't start changing too much till 1986, 1987. But what we learned is, it's tough to fight a war, an insurgency war, against another country, 7,000 miles away or 8,000 miles away. And so I think in my mind, not necessarily Ukraine and Russia, but I think like China and Taiwan.
Mm-hmm.
China we've talked about some of these landing ships that they're building for I imagine for an invasion. But so let's fast forward a few years. China invades Taiwan, and what are we going to do? I mean, we are 7,000 or 8,000 miles away, and they're, I don't know, 120 miles away from China.
Yeah.
I mean, it seems like you're from a history lesson standpoint.
That would be over before we could even get there.
Yeah. From a history lesson, if you were a war college professor, you would probably look at it and say, well, I don't think we should do that. And then you take that and you move to Ukraine and Russia. Now, a little bit of a different scenario because Ukraine is basically surrounded by these other countries. It's not an island, right? It's in Europe, if you will, even though it's Eastern Europe. It's probably, I mean, it's maybe one of the reasons why we don't have boots on the ground at the moment in Ukraine is because over the years we've learned that it's really tough to fight a war thousands and thousands of miles away.
And a country that has nukes.
Oh, yeah. I kind of forgot about that.
But it's
right?
similar because Russia's claiming, this is part of Russia. They are Russian speaking. This was part of our country, not just during, the USSR years, but going back to, that was Putin's thing. He had the interview with Tucker Carlson. He's like, let me give you a history lesson, boy. And he went back and took him to like the 1800s or 800s, sorry, the 800s and say, this was our land. Same thing with Taiwan, though. China considers Taiwan as part of China.
Yeah.
And historically, there was period, it definitely was. Sure, but they voted, they wanted independence, and their current government in Taiwan believes that and is willing to fight for it.
I don't necessarily have, I don't want to say a strong opinion about it. My dad was in the military. He was in the Air Force. He was stationed in Okinawa. He never shot at anybody, never got shot at anybody or vice versa. But it just seems to me that sending our troops over there to defend a country 7,000 miles away could lead to a lot of bad things, a lot of blood spilled for no particular reason. I'm not saying let them go and not do anything. It would be tough to defend.
We're talking about autonomous driving previously, and I just think, I don't want to put any Americans in the line of fire. I think wars should eventually progress past that. And I think, we don't have people on the ground, hopefully, in Ukraine. I wouldn't want people to be on the ground in Taiwan, but does that mean our jets or maybe drones?
Well, yeah, you said autonomous.
Yeah,
right?
couldn't be there helping and defending,
But play that out. If we start defending Taiwan with drones and we start killing Chinese army people, I mean, that seems like we then are at war, physical, like literal war with China.
Yeah.
You think a trade war is bad, right?
Yeah.
I mean, an actual war with China would be...
Again, it's how far we're willing to go to defend them. Right now, we have a hardline stance that we will help them, but I think Trump hasn't committed to troops on the ground, and rightfully so, I think. But yeah, we also can't let them have the stranglehold on Taiwan semi and just start rolling over countries as well, because we talk about the fear of Russia just continuing on past Ukraine and going into Europe, and that's a major fear. I don't think that's going to happen at all. But, what would stop China from they're out? They have you ever seen their ship fleet, their fishing fleet that just goes around the world pillaging ecosystems and taking it back home? And technically they say they're in international waters, but I've heard rumors like when they're in Argentina at nighttime, they would come in like within 1 mile of shore, just pillage and leave.
Yeah.
We can't let them start walking over people. They're putting in those artificial islands. There's a lot of scary things that they're doing. And, the United States, maybe it's rich coming from us where we've done, a lot of quasi-imperialism.
No, get out of here.
But, hey, that's us. We can trust us.
It's okay when I do it, just not when you do it. Is that what you're saying?
maybe.
The thing is, just to go back to to Putin and to Ukraine. President Obama had said that there was a red line, or a line, and then Putin crossed it, and we didn't do anything.
Yeah.
I mean, literally, nothing. We watched him. He didn't jump over it. He slowly crossed over it, and one day you're like, oh wow, he's way over the line, but we didn't respond.
And he had Crimea already.
Yeah. I think that's how. I mean, the history books will write it as like, we just watched him.
Oh, it's just a insurgency. It's Russian sympathizers in Donetsk.
Yeah.
Weird. Yeah. And then boom, they have Crimea.
Yeah. I think that'll probably go down as a historic blunder on our part. At the same time, I don't know what would have happened. We could have again put boots on the ground at that point, or even responded with fighter jets and bombs. And
is there any difference in us defending another country on that country's territory versus, like you said, about us, say we had drones patrolling over Taiwan and they infringe on Taiwan sovereignty and they are coming on the coast and our drones start attacking them? Is there any difference between us attacking them at free sea and their homeland versus protecting? They certainly wouldn't in their propaganda delineate between it, but is there any recourse that's different? The reaction function's the same. That's open war. If they are on Taiwan's land and we drop a bomb on the beach and kill some of their military forces, is that still an open act of war by us on them?
If they're in Taiwan, if the Chinese army's in Taiwan, I mean, yeah. Yeah, it's still I don't know that it crosses a line, but it is still killing.
It's not
Chinese.
Offensive though.
Well, it is.
It's defensive. It's on their land.
Taiwanese land. Yeah. Well, that is something.
That's why they don't pay me for geopolitical strategy, because I don't know the answer.
Yeah, I don't think either one of us know the answer to that. I just know that it's, as they coined the term, a quagmire in Vietnam, it would be a quagmire in China, Taiwan, and it certainly seems like a quagmire right now in Russia, Ukraine. And, Putin, I think I've said this many times on here, but the stated goal for the Russian president is to take back all of the land that's occupied by Russian speakers, or that was at one time occupied by Russian speakers. And I mean, nothing's going to change his desire to do that unless we come in with a giant stick. And that giant stick really only is nuclear. And all of a sudden we're back at a Cold War, or even a hot war. And I mean, as people that live and breathe markets, I'm pretty sure the market would go down if we got into a hot war with China.
Yeah.
Or excuse me, in Russia, right? I mean, I think it'd even go down if we had boots on the ground in Ukraine, possibly.
Mm-hmm.
So that's not something that I want to see. I do really, really want to see peace. There's too many Ukrainians dying. There's a lot of Russians dying as well. And the president,
there's North Koreans apparently,
and North Koreans too. Yeah, they just came out and they verified that they were sending troops to North Korea. I don't think the North Korean troops on the ground in Ukraine or in Russia have any idea what's actually going on. They're taken out of their education camps and given some firearms and said to go over here and kill these people. Doesn't seem like a good deal to me. But this is going to play out, right?
Yeah.
And as you said, we're not paid for our geopolitical analysis. Oh boy. But yeah, so 50 years today marks the fall of Saigon, which they renamed Ho Chi Minh City, right after the founder. And hopefully we won't make any of those same mistakes again, and the people that lived through Vietnam and were advisors to Vietnam will keep the people's heads on, and we won't have to worry about that again.
Yes, sir.
That's what I would like to see. But speaking of bad things, and since we were here last time, the Pope passed away.
Mm-hmm.
right? That has been in the news, obviously. With I think the decision for the new pope is being done right as we speak, right? The conclave is happening right now.
Yeah, I went out and bought that movie and watched it like 2-3 weeks ago, not knowing they'd make it for free as soon as he did pass away. But he was the first Latin American pope, first pope since the 8th century, I believe, to be non-European born, and he was also the first Jesuit pope. So definitely many firsts there.
Yeah. During I didn't watch the whole funeral or anything like that, but I certainly got some of the highlights, and they were talking about some of his deeds in Brazil. It seemed like an interesting guy. Have you ever been to Italy?
Going to Rome is one of my future goals. My cousin's on her starting Thursday. She'll be on her honeymoon in Rome in Italy. So
yeah, I wonder if it's really busy at the Vatican.
Oh yeah, for sure.
Yeah.
Well, as a Catholic, they trying to facilitate ways for you to go and pray. In St. Peter's Square. So there's options and email things that go around. But
yeah,
I didn't have that trip in the bag for this one.
I've actually been to Rome twice, and magical city. I mean, just being there and the history, obviously, of Rome and being in the Vatican. And I was there once with Ailish and then once with her family. And I rented a scooter and was driving people around. And it is a magical city. It's really hot sometimes, though.
Yeah.
It is really, really hot. A little bit dirty here and there. But I'd go back to Rome in a heartbeat.
Yeah.
Now you're leaving here tomorrow. Where are you headed?
I'm headed to Vegas.
Oh boy,
for some fun.
Oh boy, what do you got going on out there?
My roommate from college, his bachelor party. So
okay.
The group has grown. Every time I check back in, we're up to 24 guys in one Airbnb, as far as I'm aware. It's going to be crazy.
You're going to get there and the host's going to say, 24 of you? Nah, I don't think so.
You're going to have to sneak a couple people in.
Oh, boy. I'm actually going to be there next week. You're going to be there this week. I'm going to be there next week. We're going to see Dead & Company at the Sphere.
That's your second show.
That's going to be my second show at the Sphere. And it's an incredible event. For anybody out there that has an interest in it. The Eagles were just there. They're starting to book some really good shows. There's a bunch of EDM stuff there earlier in the year. It is incredible. If you have any interest, I would go on YouTube and just check out some of the shows that people have posted, or even some of the shorts out there. It is a completely different experience from seeing a concert like you would normally see something at the Man or any normal. It's completely different than any normal concert you have ever been to.
Yeah. I can't imagine. EDM is crazy enough, and then you do it in the Sphere with all the theatrics.
It's just all encompassing. I mean, it literally goes up and above your head.
I'm not an EDM guy, but
yeah. You're not an EDM guy. We listened to EDM like all day yesterday in the car.
We did. You
didn't say, "Hey, turn this crap off."
You didn't have it that loud that it was racking my brain.
Okay.
I mean, I have ADHD to begin with, and then you throw that music going. I wouldn't be able to hear a word you said probably if it was any louder.
All right. So I mentioned Friday we have the jobs report coming out. It's probably going to be a pretty big deal.
132,000 expected approximately.
132,000. What do you think the replacement rate is to keep the unemployment rate from going up?
I would say you're looking at like 70 to 100,000 or so, most likely. Where anything below there, you're going to see that unemployment rate go up by a 10 potentially. So I think our new sweet spot for where we are in the economy, where rates are, is, if you're 100 to 150, I think that's a solid place to be, on margin, and maybe a 3-month rolling average. That would be the target.
Yeah. You mentioned rates. I feel like the Federal Reserve is stuck between, let's say, a rock and a hard place, however you want to couch it, but they're tasked with, and I know I've brought this up on here before, but they're tasked with keeping employment going, right? Stable employment and stable prices, which is a word for inflation, right? So now we have a situation where inflation could be rising due to tariffs, and unemployment could be rising, and jobs could be actually coming in less than expected. It may not happen, but it seems like, based on some of the things we saw, FedEx is laying off 18,000 people.
There's a little
yesterday.
company specific in with that, with what happened with Amazon. If anyone out there doesn't know, basically Amazon and FedEx are sort of separating a little bit, and previously FedEx was doing a bulk of the deliveries for Amazon, and I guess Amazon now has the capacity, after their outrageous investment that occurred after and during COVID, that they maybe don't need FedEx as much, and for, I guess, the price contracts that were underneath there, it didn't make sense for FedEx to continue it, and they are amicably going their separate ways a little bit, but unfortunately that results in that layoff number.
Yeah, amicably separating. That seems like a conscious uncoupling to me.
Yes.
Right? Isn't that what she said? A conscious uncoupling. But going back to the Federal Reserve, they're in a tight spot. The president is looking for the Fed to lower rates, and the Federal Reserve is saying, we're not there yet. And I don't mean they're in a tough spot just because the White House wants them to lower rates. They're in a tough spot because inflation may be picking back up. Now, it seems like if it does, it's solely going to be, I don't know if the word's temporary, but it's going to be based on tariffs. And so unless the tariffs keep ratcheting up, which I don't think they would, it could be, and one time's not the right word, but a singular event over a course of a few months that moves prices higher.
Powell did say if that is the scenario that they're looking at or they expect as they're doing, their conversations internally, if it's a one-time price level increase, they said they would opt to see through that and not raise rates to stem that one time, because obviously it's a one-time move.
Yeah. But one time doesn't mean 1 month.
Right.
Right.
It would take 12 months for that data from that one-time price increase to filter out.
Yeah. It really, so you said 12 months, but 12 months because of the way
if
the
you're
numbers,
looking at a year over year.
Yeah. But on a month-over-month basis, I think you could see inflation get hot again for, let's say, from the difference between, let's say, March, April, May, June, July. It might ramp up and then flatten back out.
Different levels of supply inventories on hand for the inputs. Yeah, certainly.
But they're still stuck.
Yeah, they're still stuck.
They are still stuck.
The market loved it when Trump said he was going to back off and not fire Powell about 2 weeks ago, and then I think it was today when last night, because he probably got that GDP read a little early. He got that negative number and he fired off something about Powell again. So
it's probably not a great idea for him to do that. I mean, Powell's term is up in 2026.
Yeah,
which I know is 8 months out, or well, I guess it's not 8; it's probably a year. Is it March of 26?
Sure where in the year they have that.
I think it's March or April of 2026 where his term is up, and he can put in anybody he wants. If I were him, I would wait, because you're going to cause, I don't know if it's a constitutional crisis for the Federal Reserve, but you're certainly going to cause a crisis
of confidence.
Yeah,
globally, because our Fed, being the global reserve currency, is the world's Fed. Our Fed has a much greater impact than even, say, the Euros or the Japanese central banks. And remember what happened, when they hiked rates 25 basis points last August.
Yeah. The world, well, their markets bled out overnight. We opened up down, but I think we ended just fine over that.
A week later,
yeah, not too bad. So here in the end, I think I'm going to come back to what I started with, which was diversified portfolios down a little bit for the year. Not too bad, starting to work again. Bonds are actually up for the year. Your high quality bonds are up 2 to 3%. Your corporates are up. And so, after 2022, everybody was like, oh, a diversified portfolio stinks. And why do I have a 60 portfolio? And, why do I have these bonds? Because a lot of treasury bonds were down in 2022. We're coming back. The diversified portfolio is coming back. I'm pretty happy about that.
One random point there on if we're talking about certain different asset classes, I'm sure people in the industry maybe notice this or see this happening. But a few months ago, J.P. Morgan and Jamie Dimon made a $50 billion plus push in a venture for private equity and private credit because it was the hot thing for the last 24 months, we'll say.
Yeah.
And, over the long term, historically, institutions have taken advantage of that, hedge funds or, think of endowment funds. And the most famous here in the U.S. is the Yale model, which Yale obviously popularized with their endowment of doing a high percentage of private credit and private equity because they have in perpetuity as a time horizon.
Yeah, right. Why wouldn't you?
But just as JP Morgan got into it, Eris and all the major private equity companies are running into a little bit of a headwind. And Yale, obviously, who we just mentioned, sort of made it famous as an investment model, is unloading about $40 billion of private equity.
Wow.
So maybe
Are they selling it to JP Morgan?
Maybe they are. Good timing there.
How about it?
But so private equity, which is less liquid and can become a problem if there are sell-offs and quick valuation changes, are going to be under a little bit of pressure.
Yeah. That's not something that it's not something that we recommend for most investors.
We don't invest in private.
Yeah. But there's a time and place for that stuff, I guess. I think in the end, a lot of those things tend to blow up, and not everything, but I just don't really think it's appropriate for the average investor. If you're like an ultra high net worth person and you can stick a few $1 million in this and not look at it for a few years, yeah, okay. I think that's
there's
fine.
Different tax products that allow you, or products to help those ultra high net worth clients with maybe converting some other asset that has appreciated greatly.
Sure.
And there's private equity or private credit strategies sometimes that can help them sort of unload those gains, but for the average client, it doesn't make sense.
Yeah. 60-40, baby.
Yep.
All right. Thank you so much for listening. Questions, comments, concerns, send them to Market Enthusiast at Good Life FA. For Good Life and the Market Enthusiast, I'm Noah Brooks. Chris Needs. Don't bet against America, anybody.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.